A lot of people assume the answer is yes, but in reality, some states don't let go that easily. You could be living abroad for years and years and still have tax obligations back home.
Exactly. And that's what we're going to dive into today. What do you still, or when do you still have to file a state tax return? What triggers it? And how you can avoid unexpected tax bills from a state while living overseas.
So, your relationship with your current state plays a huge role as to whether they'll continue to tax you or not. And what happens is the states will look at your ties. Things like think your driver's license, your voter registration, your mailing address, and even where your bank accounts are located. So as you're planning and you're thinking about that account that you left in this state and now you're living in this other state, you really want to watch out for things like those. So if these things that we're calling ties are still active, the state may make a very convincing case that you're still a resident for tax purposes, and so they'll want to tax you. So then let's go back to the question of what can you do to reduce or avoid state taxes while living abroad? One of the most effective strategies, and this is where now we talk about planning being so key before you leave the country, is to establish residency in a state with no income tax before you leave the US. So for example, states like Alaska, let's see, Florida, Texas, Washington, although I know Washington just changed something there in the last 1 year. These states don't have state income tax. There's also, let's see, Tennessee, New Hampshire, because they only certain types of income like interest and dividends. So I'm not saying you have to physically live there, but you do need to show that somehow your ties to that state are really, really strong. So examples are, let's say you update your driver's license, you go ahead and do your voter registration there, your mailing address there. And so basically what you're doing, you're creating a very clear documented process in that state. States look at your actions, not just your intent. So if you do that, you do have the opportunity to actually avoid state taxes.